Hey everyone, I was just thinking about something. The commercial real estate sector is, overall, doing pretty well. I mean, we're still in the middle of a global pandemic. We shut down a big portion of our economy for several months last year. We have a massive labor shortage, and our supply chain logistics are running into all sorts of problems. And yet, apartments are doing great. Vacancy rates hit an all-time low and rents are climbing. Industrial is doing great. Rents are growing, vacancies are falling despite record construction levels. Self-storage is also doing great with record low vacancy. Retail, particularly anchored neighborhood centers and single-tenant properties, has held up remarkably well. And office is a bit soft with several unknowns still out there, but the sector definitely hasn't hit crisis mode. Hotels have had a tough run, but the average daily rate for most hotel segments is above pre-COVID levels, and occupancy rates are relatively close to where they were before the pandemic. There are notable exceptions like downtown hotels that cater to conferences, but overall the hotel market is looking pretty good. Seniors housing also had a bumpy road, but that road is leading to consolidation that will likely ultimately lead to the strengthening of the seniors housing sector overall. When you look at it, the big picture for commercial real estate is holding up very well. But how can that be? The news we read and see every day is filled with problems, downside risks. But consider this. In real inflation-adjusted dollars, U.S. household wealth is up 21.4% from pre-COVID levels. Even if you toss out the gains in the stock market and only include owner-occupied real estate and money in bank accounts, household wealth is up by 15.7% compared to 18 months ago. Think about that for a moment. We're going through a major health and economic crisis, but people are wealthier than ever before. That's a big part of why real estate is outperforming. Despite the pandemic, the economy is growing. People have money in their pockets and they are spending it. There's enormous housing demand. Retail sales are 19% above pre-COVID levels and savings are way up. So what's the outlook for commercial real estate investors? First, let me talk about the risks. The greatest economic risk factors at the moment are inflation, which has little negative impact on commercial real estate over the short term, and supply chain problems. Supply chain issues are actually a positive for most commercial real estate property types because they cause shortages of building materials, and that in turn restrains competition from commercial real estate development. So aside from an inflation or supply chain induced recession, which seems unlikely, at least for now, the outlook for most commercial real estate sectors remains promising. We haven't nailed down our commercial real estate forecasts for 2022 yet, but we're working on them. With a baseline economic growth forecast of 4% for next year and a strong employment market despite labor shortages, the one-year outlook for most commercial real estate is strong. Now, the outlook beyond a year gets a little bit murky, but momentum is favorable. So, even though the bid climate for most property types is aggressive, supply and demand trends look favorable. That's why many of the most active investors are pricing strong growth into their underwriting. This is especially true for industrial, self-storage, and apartment properties, but it also holds for many retail, hotel, seniors housing, and even office assets. The sector looks strong over the short term, but it looks even stronger when you focus your eyes on the horizon.